Good morning, traders and investors. My name is Shen Mongangi, one of the best market analysts here at HFM. So, let me know where you're tuning in from. You can type on the comment section based on which platform you are watching us from, and we'd like to have this morning, have this time with you, and you're going to have a good time in this daily morning market call. So today on the Australian dollar, so you have some spike on the 15 minutes chart. If I can share my screen. Thank you. So you have a spike on the 15 minutes chart, and this is from the RBA. They have decided to hold their interest rates, and the expectation was a cut on the Australian dollar, and we never got that cut. We got a hold, and that brought that spike in and a strong bullish momentum on the Australian dollar. On the daily chart, we are currently above the 0.64917 level, and we tested that zone today, and it acted like a good support, bringing that sharp spike upwards. Currently, the Australian dollar is in a bullish momentum, and also we understand the USD, the dollar, is also in a bullish momentum because of the NFP that came out last week, Friday. So the catalyst that will be for the Australian dollar will be the FOMC minutes coming out tomorrow, where investors and traders will be very keen to listen at what's the future path for the dollar is based on the interest rates, and what is the Fed going to say tomorrow. So today, global markets are exhibiting a stark divergence as investors with renewed US trade anxieties and unexpected central banks moves. On Monday, yesterday, simmering tariff concerns pulled US indices back from their all-time highs. If you look at the US 500, you can see we had stretched quite for some days, for more than 7 days here, and we moved all the way to the 6328.28 level, and at the moment you're experiencing a pullback. And if you're trading support and resistance, we all know after a breakout what to expect is a pullback, then a continuation of the move. So is 6161.35 a good level? I will be looking at that level to be looking for some bullish moves to see if I can get some bullish continuations. But remember, if anything, any form of market concerns that may come and affect the US 500, idea, our trade idea changes. Also, if I come to the market recap on gold, let's move to gold. At the moment, gold we are experiencing some form of consolidation, and this is because of uh, lowering trade concerns. There's no form of fear or uncertainty being brought in from the like previously when we had the tariffs, and at the moment it's a risk off tone. And yesterday we closed at a 0.1%, showing a form of hammer candle, but still it's not a hammer candle from any of our key levels. So this is not it's not a hammer to make a it's not a candlestick to make a key decision, because we are in the middle of a zone. If it was a hammer candle at the 32.52 level, it will be a good level to be looking for buys, because we understand hammer shows buying pressure stepping in. Then at the moment, yesterday the asset showed some form of bearish pressure, but bullish pressure stepped in. uh, Bullish pressure stepped in from fresh trade jitters, because you understand also on July 9th there's some form of tariff tariff deadline that is coming in, but there's some news also that there's an expectation for it to be moved to August 1st. Today, gold remains in a state of flux. While a stronger dollar could be a headwind, any escalation in trade tensions will likely boost its safe haven appeal. The technical support is seen at a 50-day simple moving average at the 33.22 level, while resistance is found at the 33.50 level. So A decisive catalyst is needed so as to break this range. It's either we get a high momentum bullish candle close on the upside on this consolidation level, or a bearish momentum candle close on the downside on this consolidation, so that we can make a key decision: are we bullish or bearish? Now moving on to the dollar. As you can see clearly, yesterday the dollar, we moved above the 96.63 level, which was our previous resistance, and we managed to test that zone the previous week. That was on Friday, when there was no form of trade moves, and yesterday we managed to move upwards on that level, showing that uh, the dollar is still strong even after the NFP results, which came positive for the dollar. So also this strong momentum influenced pairs like Euro USD and JVP USD. For we all understand these are dollar quote pairs. Therefore, if dollar is getting strong, then Euro will be falling, and the same for JVP USD. If I move to the daily chart, we saw yesterday we had that bearish momentum, and we are back testing our previous support zone. And you can see clearly the support zone that we have been marking and looking at for some weeks. For those who have been joining our daily money market call, we are at the 1.35690 level, and that's looks like a strong support level. But remember, even if it's a support level where we had previous form of buys, at the moment we have some form of a strong bullish momentum on the dollar, which is influencing the VP and the euro to be bearish. You also see for the euro, yesterday we had that form of bearish momentum as the dollar gained strength, and still we are far clear from our support zone at the 1.16235 level. That's a key level to be looking for buys if we get any form of trade news that may influence our trade decision once we are in that level. Also on the USD JPY, we have been in this range for quite a while, from the 146.940 and the 140.787. What people are doing right now is playing a bounce off from this level. If we come to that level, you play a bounce off all the way to that level. If you come to that level, a bounce off all the way to that level. And at the moment, I can see we have a clear support zone that we had not marked, and that seems to be our support zone. Remember, support zone is a range, it's not a line, and therefore we are at this support zone at the 142.402 level. At the moment, also on the USD JPY, considering that the dollar here is the base currency, therefore if the dollar is gaining strength, the USD JPY is also gaining strength. And yesterday we bounced off from the 144.120 level. And right now it seems we are heading for the 146.940 resistance zone. Also, another thing, not to forget that the JPY had decided to hold their interest rates. Therefore, at the moment, both the USD and the JPY, in terms of interest rates, all of them, they have held their interest rates. But what is influencing this major move is the NFP that came out on Friday. Lastly, when you come to the US oil, yesterday, crude oil backed the risk-off trend with WTI, with this oil rising 1.4%. You can see with this bullish momentum, and it closed around the 67.90 per barrel level. The market appeared to focus more on on the supply side, discipline from the OPEC Plus, and persistent geopolitical risk rather than the immediate trade fears. Therefore, today and this week, oil prices will continue to be influenced by the weekly AIA petroleum status report, which is going to be produced tomorrow on Wednesday for inventory data. The broader market's risk appetite, driven by trade news and the strength of the US dollar, will also be a key factor. Remember, what you're watching tomorrow for the US dollar is the FOMC minutes, which investors and traders will be keenly looking at it so as to know the future rate path. So with that said, We have analyzed both the dollar market, the gold market, the US indices market, the forex market, which includes the euro USD, JPP USD, USD JPY, Audi USD, and lastly, we have analyzed the oil market. For those who are trading, remember to use strict risk management. Remember, your strategy is for offensive. It's like a football play. Your strategy is for offensive, but your risk management is for defensive. So learn how to defend your learn how to defend your money as you also attack and get those profits out of the market. So with that said, my name is Shen Mwangangi, one of the best market analysts here at HFM. Thank you all for joining for this daily morning market call. Right now, we'll be doing the morning market call via our social media platforms. Make sure that you have followed our media platforms and you have hit uh, the notification button for any form of live stream that we may have on our pages. With that said, thank you for joining in and goodbye and see you tomorrow.